Ever wondered how crypto markets work and how you can make money in both bear and bull markets? Well, you're not alone. The world of cryptocurrencies is as exciting as it is complex, and it's essential to understand the basics. Let's start with the crypto markets. Much like traditional markets, crypto markets are places where buyers and sellers meet to trade, but instead of goods, they trade digital assets. Now let's talk about bear and bull markets. Picture a bear, swiping downwards with its mighty paw. That's a bear market, where prices are falling and investor confidence is low. On the other hand, a bull market is just the opposite. Imagine a bull charging upwards with its horns. Prices are rising and the market sentiment is positive. But here's the catch. Whether the market is bearish or bullish, savvy investors know how to make money. Intrigued? Stick around to understand the art of making money in both bear and bull crypto markets. First, we need to understand what bear and bull markets are. You see, these terms are borrowed from the behavior of these animals. A bull thrusts its horns up into the air, while a bear swipes its paws downward. These actions are metaphors for the movement of markets. Let's start with bull markets. A bull market is characterized by optimism, investor confidence, and expectations that good results will continue. It's like a party where everyone's having a great time and nobody wants to leave. This is typically when the economy is strong or strengthening. Think low unemployment, steady GDP growth, and robust corporate profits. Prices of securities rise or are expected to rise in such a market. It's essentially a market on the upswing. On the flip side, we have bear markets, a less festive occasion. A bear market exists in an economy that's receding, where most stocks are declining in value. It's characterized by investors being very pessimistic, expecting losses to continue into the foreseeable future. In such a market, you'll often hear the phrase, "sell high and buy low." This is a time when unemployment is high, recession is in sight, and companies aren't making as much profit. It's essentially a market on the downturn. In both markets, the conditions do not arise out of nowhere. They are typically the result of a series of events or circumstances either in the domestic or international arena. And while it's possible to predict the arrival of these markets based on these events, it is never a guarantee. The key is to understand that markets will fluctuate, and they will go through periods of ups and downs, bulls and bears. As an investor, your success lies in your ability to adapt to these changes, to know when to hold them, when to fold them, when to walk away, and when to run. Now that we understand what bear and bull markets are, let's move on to how you can make money in these markets. Bull market is the golden period for investors. How can you make the most out of it? Let's dive right in. A bull market is a period of generally rising prices. The start of a bull market is marked by widespread pessimism. This is the point when the crowd is the most bearish. The smarter investors begin to enter the market at this stage. So, how do you make money in a bull market? Step 1. Buy low and sell high. This is the fundamental principle of investing. You buy when the prices are low, and you sell when the prices are high. But remember, timing the market is a tricky business, so instead of trying to time the market, focus on time in the market. Step 2. Diversify your investments. Don't put all your eggs in one basket. Spread your investments across different types of assets. This way, if one investment doesn't do well, others may do better, reducing your overall risk. Step 3. Reinvest your profits. When you make a profit, don't just spend it all. Reinvesting your profits can help you take advantage of the power of compound growth. This is how wealth is built in the long run. Step 4. Stay informed. Keep an eye on market trends, news, and other factors that may affect your investments. Knowledge is power in the world of investing. Finally, Step 5. Be patient. Rome wasn't built in a day, and neither is wealth. Investing is a long-term game. It takes time to see significant returns, so be patient, stick to your plan, and let your money work for you. These steps are not guarantees for success, but they can increase your chances of making money in a bull market. Remember, investing involves risks, including the risk of loss, so always invest with caution and seek professional advice if needed. With these steps, you can make a good profit during a bull run. But what about a bear market? Can you still make money? Well, that's a topic for our next scene. Stay tuned. Bear markets can be intimidating, but they also present unique opportunities. How can you benefit from a bear market? As we delve into this topic, let's first clarify what a bear market signifies. It's a period when prices in the market are generally falling, and a condition is typically set when there is a downturn of 20% or more in multiple broad market indexes over at least a 2-month period. This can sound alarming, but don't panic just yet. There are ways to navigate and even profit from these rough financial seas. One strategy to consider is short selling. In this scenario, you borrow shares of a stock from your broker and sell them immediately at their current price. Then, if the stock price falls as you anticipate, you buy back the stock at the lower price and return the borrowed shares to your broker, pocketing the difference. It's like a bet against the market, but remember, it's a high-risk strategy and not suitable for beginners. Another strategy is buying the dip. This means purchasing an asset when its price has dropped. In anticipation, it will rise again. Think of it as a discount shopping opportunity for quality stocks. However, it's essential to conduct thorough research to ensure the asset's price drop isn't due to fundamental issues that might prevent a rebound. You could also consider safe haven investments, such as gold or government bonds, which have historically performed well during bear markets. These can act as a buffer to protect your portfolio from market volatility. Lastly, bear markets can be an excellent time for reevaluating your investments. It might be the right time to sell off underperforming assets and reinvest in those with stronger potential. Bear in mind, it's crucial to stay patient and disciplined during a bear market. Avoid making impulsive decisions based on fear or panic. Instead, keep a long-term perspective and stick to your investment plan. Bear markets may seem tough, but with the right strategies, you can still make a profit. Remember, even in the stormiest weather, skilled sailors can use the winds to their advantage. While specific strategies work for specific market conditions, some strategies can work in both. What are they? Well, the first strategy is diversification. This is a fundamental principle in investing, not just in crypto, but in any asset. By spreading your investments across a variety of cryptocurrencies, you reduce your risk. If one crypto fails, others may still perform well, balancing your portfolio. The second strategy is dollar-cost averaging. This involves investing a fixed amount of money into a particular cryptocurrency at regular intervals, regardless of its price. This strategy helps to mitigate the effects of volatility, which is particularly prevalent in the crypto market. When prices are low, you buy more units. When they're high, you buy fewer. Over time, this can reduce the average cost per unit of your investment. The third strategy that can be effective in both markets is to hold for the long term. Crypto markets are notoriously volatile, with prices capable of swinging wildly in a matter of hours. However, those who have held their investments over the long term have often seen significant returns. This approach requires patience and a strong belief in the future of cryptocurrencies. The fourth strategy is to do your own research. Don't rely solely on the opinions of others. Study market trends, understand the technology behind the cryptocurrencies you're investing in, and stay updated with news that could impact their value. Knowledge is power in crypto trading. Lastly, remember to manage your emotions. The crypto market can be a roller coaster ride. It's easy to get swept up in the euphoria of a bull market or the despair of a bear one, but making decisions based on emotions can lead to costly mistakes. Stay calm, stick to your strategy, and don't let market fluctuations shake your resolve. With these strategies, you can make money in both bear and bull markets. So keep your eyes on the prize and don't be swayed by the market's ups and downs. Remember, in the world of crypto, patience is not just a virtue, it's a strategy. In this video, we have discussed how to make money in both bear and bull markets. We've delved into the heart of the crypto jungle, dissecting the personalities of both the bullish and bearish beasts. In a bull market, we've learned to ride the wave, buying low and selling high, capitalizing on the upward trend. Conversely, in a bear market, we've seen the importance of short selling and hedging to protect our investments, and even make a profit when prices are falling. We've also highlighted strategies that work in both markets. Diversification, for instance, spreads the risk, while dollar-cost averaging can help mitigate the effects of market volatility. Finally, we've underscored the importance of patience and research. The crypto market is not a get-rich-quick scheme. It requires diligence, a cool head, and a keen eye for trends. Now, you are equipped with the knowledge to make money in any market condition. Remember, patience and research are your best friends in the crypto world.